Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we are looking at 10 different companies that you could start with if you are building a portfolio. These 10 companies have a couple of things in common, and the first thing is they have a very high dividend yield. Recently I released a video that is called Building a Dividend Growth Portfolio 2024, and the focus on that video was to build a dividend growth portfolio, meaning companies that increase their dividend year after year for 10 years, 15 years, and they've increased it double digits and dividend is safe. In today's video we're going to do the opposite. We're going to focus on the income side of things. So this one, you basically not worried about the income. What you want to do is maybe just use that money maybe 10 years from now, 15 years from now, 20 years from now. But what if you needed that income? Maybe you needed the income now to survive and basically to get paid every single month. So that's what we're going to do today. We're not going to focus on the growth, although some of them are actually very good dividend growers. We're going to focus on the income side of things. Also, I recently did a video. So if you're starting in 2024 or you've already started and you're looking for kind of set and forget kind of portfolio, I did this set and forget 3 parts videos. And all 3 of them, the first one focused on 15 different stocks. The second one was focusing on basically 8 different ETFs, and then 5 ETFs. So all Sharia compliant ETFs and stocks that you could potentially start with. So if you want to if you're thinking of starting your own portfolio soon, you might want to check out some of the ETFs. If you're completely new, by the way, and you're still learning about the stock market and how it works, I suggest you watch these 2 videos about the ETFs, because ETFs are a very simple way of investing, meaning you buy a basket of stocks under that ETF and you don't have to worry about the fluctuations of the prices, whatever. Your dollar cost average every single month, meaning you put the certain amount, £100, £20, whatever you can, and you kind of forget about it. Whereas if you're into more about learning about and analyzing individual stocks and tracking their progress and all of that stuff, it's also look at the set and forget portfolio stocks 2024, inshallah. So again, before we move on, it will be really nice if you can like the video that you're watching right now, as well as of course any videos that you watch in the future. Subscribe to the channel so you don't miss out anything, as well as joining us on the Patreon account, where you get access to the Discord, where a lot of brothers are actually sharing very good practices, as well as again all the Sharia compliant tracking ETF trackers and dividend trackers and all of that stuff, inshallah. Right, let's get started with the video. So as always, we're going to start with the 10 different companies. Then I'm going to give you, so if you invest in £10,000 or dollars into these 10 companies, what will be the income that you'll be receiving, and what is the dividend yield for that portfolio, and then I'll show you the Sharia compliance side of it. So there are 3 different sections. So I'm going to quickly focus on, like I said in the last video as well, my focus here will only be, I'm not going to read everything here, I'm only going to focus the 5-year growth rate, the dividend safety, okay, and then of course the dividend yield for these companies, okay. And as you can see, the first company we're going to look at is Canadian Natural Resources, company that we've spoken about very recently. It has a 4% dividend yield, 5-year growth rate of 20%, okay, and safety of 70%, which is really good. 23% and 70% safety, which is really, really good. It looks like it's basically, I couldn't find information on Morningstar, so this information comes from Seeking Alpha. But according to Seeking Alpha analysts, it actually looks like it's a buy right now, and is a 12% upside. It has a 12% upside from where it is right now. They're expecting the price to go up to $73 in comparison to this 65 current price. The next company we're looking at today is CVX, again Chevron, a company that we've spoken about very recently. $281 billion of market cap. It has a 4% dividend yield right now. The 4-year growth rate is 6%, safety of 90%, and it's fairly valued at the moment. $172 per share is where they think the price should be. The next company we're looking at is UPS, one that I own in my portfolio. It has over 4% dividend yield right now, 13% in growth. It has grown that dividend for 13% in the last 5 years, Safety 69% and fairly valued at the moment. $164 per share is where they think the price should be. 157 it is where it is right now. The next company we're looking at today is Emerson Electric. This company, I used to own it very long time ago, and I kid you not, I think I sold it about 3 years ago, I think it was, and the price was about this. So it hasn't actually done much in terms of price wise. But yeah, 2.2 I think is one of the lowest dividend yielding companies that we've got in this portfolio today. So 2.2, basically 5-year growth rate of just 1%, and safety right now is just 78%. In terms of the Morningstar valuation, they're saying it's 11% discounted right now, and $109 per share is where they think the price should be. You can also look at, by the way, what basically the latest increases as well, if you're interested to see if they're actually growing that dividend. So far, the first 3 was not bad. This one is terrible, just 1% and growing 1%. The next one is J&J, 2.94, almost 3% dividend yield. The 5-year growth rate of basically 6% and 99% safety, 4% discounted right now. $164 per share is where they think the price should be. Next one is Kimberly-Clark. This is one of the companies that I used to own in the portfolio for a long time ago, and I actually sold it around this time as well, about 3 years ago, and it hasn't done anything since. But dividend yield of 3.88, 4% 5-year growth rate of 4%, and 88% safety right now, and 11% discounted right now. $136 per share is where they think the price should be. The next one is Exxon, again another company that we talked about recently. It has a market cap of $400 billion, so it's a huge company. 3.7% dividend yield, 3% in the last 5 years, 80% safety, 19% discounted right now. $123 per share is where they think the price should be. The next company is Clorox. This is one of the companies, I think I bought it, but I sold it very quickly. I can't remember why. It was too expensive at one point in 2021 because of all the cleaning that because of all the cleaning that we had to do at that point, and the company went up so high and never recovered from that. I think I bought it around that time, made a little bit of profit, I think, and then I sold it. Almost 3.5% dividend yield right now, 6% in terms of the 5-year growth rate, 70% safety, fairly valued at the moment. 156 is where they think the price should be. The next one is a company that I own in this portfolio, and that's Medtronic. 3.21% dividend yield, 5-year growth rate of 8%. The latest increase I think was 1 point something, or 1 point, just rounded it to 2%. Safety right now 99%, 26% discounted right now. $112 per share is where they think the price should be right now. That's about basically almost £30 from $30 or less than where it should be. And Public Storage is the next one, 3.94% dividend yield. Recently was about 4 something percent. The stock has actually recovered. I was down 1 point, I think $800 or whatever it was, but now I'm up again, so it's actually quite nice. In terms of dividend, latest increase was 50%, but growth side, they don't really increase, they can cut anytime, so they're not really consistent enough yet. But 96%, so the dividend is really safe right now. You're getting about $12 per share, every share of this company that you own, and it's fairly valued at the moment. $317 per share is where the price should be right now. It's $305. So there you have it. You can pause the video and have a look at the rest of the information, including the free cash flow, because the free cash flow is what's helping us and get paid. Okay, so the free cash flow is the money that they can use basically to pay out that dividend, buy back their own shares, pay off any debt, reinvest in the business, acquire the business. They can do a lot of money with a lot of things with that money. So that's one of the things that you need to look at. You can look at the total return in the last 10 years to kind of give you an idea, and also the growth expectations for the next couple of years. That's if you're interested in any of these companies. Of course, as always, do your own research and a bit more information and so on. Let me reduce the size here so we can see the entire thing. So let's just move the whole thing so you can see what the whole. Now, so there are the 10 companies. The bit that I need you to focus on is the 10,000. So we invest in $10,000 into all of these companies, and this is the shares that we will get for each. Just equally divided is about basically 900 plus for each, or for each stock, if you like. and the dividend yield, current dividend yield for all the companies, and this is how much you will make from each stock. Okay, and the total that you will make by investing this is $360 a year. Okay, that's not a lot, of course, but that's money that you don't have to work for. And the latest increase basically was about 9% in total, but the last 5 years you get about 7%. So you're getting 7% increase of your overall money that you've invested. And a lot of these companies, so the portfolio that we looked at last time, I think was 2 point something. Right now we're looking at about 3.5% dividend yield. So this is tailored more for someone who's really after that income, because as you can see, some of the companies pay really high dividends, okay, in terms of percentage wise. So you can see here they 4% plus, almost 3% plus, okay. But overall, this portfolio yields 3.55. So the dividend yield on cost in the long run, it might not be great, okay, especially for those who are lower, the ones that are not increasing the dividend as much, okay, but you get that income, okay, and that's if you're after that income. So right now, like I've always said to you guys, and this is one of the reasons I wanted to do this, to make sure, because someone said to me, are you excited? So I said basically something about being excited about 1% dividend yield. Right now, I don't really need that income. Whatever you see here in this portfolio, all of these companies, some of them, like this one here, Visa, is 0 point something, 0.68, whatever it is. Okay, so the dividend yield is actually not huge. But then I do own some companies like Popular Storage that has a high yield, and Linds and so on. Oh, I think it was this one here. Lin is actually 1 point something. So I'm not really after the yield right now. I'm after the growth side of it. That's why I'm actually bought a company that's a dividend aristocrat that I know is going to grow the dividend double digits in the next 5 to 10 years. But if you're after just the income, then you are after the yield. These are 10 companies that you could potentially look into to invest in going forward, right? Before I stop the video, I'm just going to show you from Sharia compliance side of things, coming from Zoya side of things. So have a look at this. You can pause the video and of course look at it. Let me just zoom in so you can see it clearly. Okay, so you can pause the video and have a look at all of these companies. But really some of these companies I do own, like I said, and some of them I'm looking at right now, especially the oil companies. So the three that I'm looking at basically right now is 1, 2, and 7. So 3 oil companies in there that I could potentially add in 2024. Okay, so there you have it. That's the 10 companies I wanted to share with you guys. Like I said to you guys, if you have not seen this video here, the growth one, go and watch that one first, and then you can watch this one. And if you want to basically a bit more information about set and forget portfolios for the ETFs or for this one here for the stocks, go and watch that as well as of course the other videos that I've shared with you guys in the last few weeks. I really appreciate all the support that basically you guys have given me so far. I will absolutely love you. There's over, I think it's about 40-something% of you guys watching the videos are not subscribed to the channel. So it would be really genuinely nice to have you guys all subscribe to the channel, and so you don't miss anything, inshallah, moving forward. And of course, as always, if you want to support the channel, you know what to do. Just go on and join us on the Patreon account, inshallah. Have a wonderful day. Assalamu Alaikum.